in the right-hand corner and select Profile. This is where we're going to white label everything within Totum. So anything that we export to PDF or send to a client or prospect, they will see your information white labeled with your logo and your contact detail. Also back under Profile, communication email, anytime a questionnaire is completed, the email will be sent to this specific email, whether it's your firm's email or the advisor's email. Completely up to you how to set that up. For prospecting and marketing, you can add these hyperlinks to your website, to newsletters, to your signature page. You can use the full questionnaire, which is 11 questions, or the mobile-friendly questionnaire hyperlink. And what we found were advisors were sending emails to clients. Clients were out, they open everything up on their phones, they're clicking on a link, and then they're trying to adjust their phone or zoom in or zoom out to try to complete the questionnaire. So we made it simple and easy for them to just click right through the questionnaire on their phone and complete it, and then an alert and email will be sent back to you, the advisor. Report detail, you can add your own disclosures to any output or export to PDF. Own text, same thing with duties and responsibilities. And by next week, we'll have another section here for a welcome page. So you'll be able to edit the welcome page as well. Asset allocations are completely optional to you. If you want to add them, you can. Minimums and maximums for equity, for asset classes, equity, fixed income, 0 to 25%, mixed or cash, anything you want to do, you want to add here, it's completely optional. And then rep codes we'll pull in from custodians or broker dealers. Proxy overrides, we pull in all the data from Morningstar and FactSet, so everything down to SITs, SMAs, variable annuities, and then all corporates, munis, and treasuries will come in from FactSet. For instance, this came in recently, and it was from Morningstar. It was a U.S. fixed income. We overrode that into actually, it came in as U.S. equity. We overrode that to U.S. fixed income. And you could do that with any other security here as well. And it'll update across the board. Model portfolios, one of the main features within Totum that are highly used. Very simply, you could come in here and create your own model. So just select Create Model, put in the name of the model, and then start adding your instruments or your securities. So if I start typing in Alpha, or Google, you'll start to see all the securities come up here. You could also easily import your models. So use our template, just add the ticker symbol or dollar amount, and it'll automatically upload here. And then you could show by benchmark your models, any tactical models, and then also other asset manager models. So if I want to add any asset managers, we'll be adding a few others here from Fidelity to SEI. We added BlackRock and Franklin Templeton. So if I wanted to add a Franklin Templeton model, I could add that simply by just pressing the button, and it will show up over here within your models. And again, to make it easy, you could copy a model. A lot of times advisors have the same holdings. You just adjust the weights. So you could simply copy a model, edit the model, or again, delete the model. And anytime you want to look at the model, you just select it, and you could go in and see the holdings. We also score each individual holding separately, and then the portfolio overall. So if you're concerned about a specific security or you want more information, you go into QQQ and select that, see it's an 84, look at a 3-year track record. I could also proxy this to another ticker if I would like, or change the asset class. So if I don't believe it's US equity and it's international global equity, I could do that as well, and that'll override it across the board. The way that we score these, we're looking at the total return data going back to the year 2000. And we're taking the average of the total daily returns, as well as the standard deviation of those total daily returns, and then we're multiplying it by the square root of 252, which is 252 trading days in the calendar year. And then for fixed income, for bonds, that's a little bit more granular. We're looking at everything from convexity to Sinkert calculator to wall, maturity, price, duration, and a lot more goes into fixed income than your security. So high level overview of how we're scoring each individual security. within the portfolio or model. Also, you can blend models. So if you have multiple two models that you want to blend together, you just choose those models and it'll automatically blend those. You can also adjust the weights if needed. And we have an integration with iRebal. So if you use iRebal, we can push and pull models from iRebal as well. Again, making it very simple and easy for you. A questionnaire, if you want to add your own custom questions, you could do that. We do not score those, but if you're looking to find out more from a client or prospect, you can add any question here, as many questions as you like. And then integrations, we integrate with all the custodians and some broker-dealers. If your broker-dealer is not listed here, feel free to contact us and we'd be happy to reach out to them and add them. We also have a number of fintech third-party providers and we'll continue to add more here as well. Orion, we also have the Orion Client Portal. Black Diamond will be adding to the timeline. Schwab, we have the Schwab Advisor Center, single sign-on. So if you're using Schwab, you could add this and then the Schwab Advisor single sign-on will be on top. TD Ameritrade, we're integrated with Bayo as well as iRebal. And Fidelity, we're also adding Fidelity's models in here as well. So a lot that we're doing across the board with the custodians and broker-dealers. Once we pull in all your data, up here on the top, you'll see this client icon, and you'll see all your clients will come in here. Easier way to look at this is the list view. And you can see a list of all your clients. You could search by your client's name or sort by net worth or portfolio update, risk capacity score, or A to Z or Z to A, ascending or descending. You could also quickly add a client here, and if you have a prospect, add the client, upload their model, or add their model, pretty simple and easy. You could also household. So if you have a number of clients, you want to household them under one roof, you could do that as well. And if you want to just jump into a client, I could scroll down or again, search by that client and just click on the client to go into their portfolio. So you see that they've already taken the questionnaire. The risk preference is a 77, risk capacity is an 81, current portfolio is a 63. So we would want to make some adjustments here. To get any of the information on Stephanie Smith, over here on the left-hand side, we have a number of tabs, the portfolio tab to go into the portfolio, questionnaire tab to go to the questionnaire, reports, and then an audit tab. The questionnaire, for compliance reasons in your records, we timestamp and archive all the questionnaires, whether they're complete or incomplete. And then you could also download a quick custom report, as well as compare side by side year over year. If you have a client or a prospect that is not tech savvy, you could download a blank questionnaire and send that to them. And then also to send out the questionnaire, you just select new, and you have the full 11 questions, or you could send out the mobile version. You have two options there. And then you could hit send and it'll automatically send your client or prospect an email. You can copy the link into an email to make it more personal, or you could even take the questionnaire with the client. And because our questionnaire is more fact-based, you may know a lot about that client already. So you have the ability to go into the mobile questionnaire and simply complete the majority of it for your client before you send it to them. So for instance, if I hit take questionnaire as the advisor, I may know my client's age, their zip code, they own property, family size, number of dependents. You may or may not know their health, so you leave that question open. You go next, put in their annual income, annual expenses you may or may not know, their net worth, you'll probably know that, their consistency in pay, investable amount that they have with you, and then their time horizon. And if it's retirement, you probably know that. If not, you can leave that blank. And then this question, you'd probably leave open how much they're willing to lose over a 12-month period of time for future gains. And then their sectors that they work in, you may know that as well. So to make it the client experience even better, you would just hit save here after you completed as much as you know about your client. And then you would exit out of here. And then back under the questionnaire tab, you would select new, the full questionnaire, and then send this link out. And then when the client opens up the questionnaire, they would just complete any questions that were incomplete. So again, making it very easy and simple. Everything is white labeled with your information, your logo, your contact information, as well as the client's name. And to get started, this is the longer version, or what we call the more detailed informational version of the risk tool or questionnaire. I could very simply complete this, asking age and income. Keep it simple. Number of people in the household and number of dependents. A lot of other tools don't break out the dependents. I have 2 kids, they're not free. They impact my investments every day. But more importantly, the IRS came out with a new rule last year that said anyone that's living with you full time other than the 2 heads of the household are considered dependents, and there's tax breaks for that. So we updated our models on the back end to reflect that in the questionnaire as well as the outcome. That's the other thing that's different between us and other tools. We're not your typical 1 + 2 = 3. We're using standard deviation and boom, here's your score. We're actually looking at a lot of detail in the back end as well as the data points that you're entering to come up with a better risk capacity score and risk preference score. And I'll get more into that in a few minutes. Annual household expenses and net worth, pretty simple. If they don't know their annual expenses, there's a calculator here. Same thing with net worth. If they're not sure what their net worth is, another calculator to fill that out. And we ask what their total investable assets are and their time horizon. And if it's retirement, they could select any age. And again, keeping the client experience simple and easy. Where do they live? What's their zip code? And do they own property? They check the box. And what we're looking at here is, a lot of data in the back end. We're pulling in data from the IRS, the cost of living index, the US Census Bureau, and multiple other resources to look at all the data on the zip code that would affect the client's overall investment risk objectives. Everything from the cost of living in the zip code to real estate prices, median household income, major industries, and more. And what we're using here is, and what we really want to focus on is, if I am in, say, a zip code that's in New York City or any place that the cost of living is high, real estate prices are high, what we're looking at is the risk capacity would probably drop in that situation. But we're also looking at other data points. So if I have a high net worth, low annual expenses, a median to above average income, then my risk capacity could stay the same or even go up. So again, a lot of data flowing in the back end, but for the client, making it simple and easy to complete. Then we want to find out what sector they work in. If they're retired, they just select retire to move on. If not, we're looking at, are they in a cyclical or defensive sector? And are they tied to one of the top 3 sectors in that zip code? So if I live in Manhattan in New York City and I'm in finance, we know that's one of the top 3 sectors. Our concern there is if we go into a bear market, I could lose my increase in pay year over year, I could lose my bonus, or even lose my job. And then we're looking at a 12-month picture here. So we want to find out how consistent their income is. More like a public sector, or it's basically guaranteed, even in retirement. Private sector pay will likely grow, but anything can happen. Or a large portion is tied to bonus and commissions. So it could be a realtor, freelancer, consultant, or someone that is heavily weighted in commission for their income. Then the number 1 question that no one asks is around health. 80% of the wealth in the US is owned by the age group that's 55 and older. Unfortunately, that's when we start to have some health issues. We want everyone to have great health, but if not, is it the head of the household, a dependent, or both? And again, a lot of factors weighing in the back as well to come up. And then when it comes to preferences, this is really the only question that you have to ask. I'm investing $500,000 with you. How much am I willing to lose over the next 12 months for future gains? As I scroll up and down here, you can see that the risk preference changes as well as the dollar amount, and that resonates better with clients than the percent. Over here, we'll say, we'll go a little bit lower and say on average, maybe with the bull market, we'll go around 10% or $50,000. So we take that $50,000 and we roll it into the next 2 questions. This is based on the Nobel Economic Prize winners from the 60s around probabilities. If I flip a coin, it's heads, you get $1,000, it's tails, you get nothing. So we added that, we take that 50,000 and roll it into this question and ask, are they comfortable with a guaranteed gain, or do they want to flip the coin? And then we flip the question around and ask about risk aversion. loss aversion? Are they really comfortable with that sure loss of 50,000, or do they want to flip a coin? What we found here is we could ask 2 more questions, or we could ask 2,000 more questions on preferences, and would only change the outcome by about 5%. And that's all we score. Then we get into the key financial goals. This is more around your fiduciary responsibilities, and then also leads into a financial plan. Any custom questions that you added up in the settings will show up here, and then the client or prospect would just complete the question. And then here's your outcome. Pretty large gap here. So their risk preference, how much risk they're willing to take, is a 38. But based on their life situation, they could take on a lot more risk, up to an 81. Their current portfolio is a 63, so they're in good shape here. But if you want to, you could adjust the portfolio up or down. And sometimes we see the risk preference and risk capacity right on the same number. Sometimes we see large gaps like this, and sometimes we see it even, a tighter spread. So there's a number of outcomes. We also see the preference these days is usually higher than the capacity, but in this situation, the capacity is higher than the preference. Once the client or prospect hits submit, you'll receive an email as well as an alert. And that's all the client or prospect would see. Then it goes back to your client dashboard, or advisor's dashboard. You'll see that it's completed, timestamped and archived. You could download a quick report for a meeting, or you could go into the portfolio. So if I want to make any adjustments to this portfolio, I could go into all accounts. And when it first pulls in from your custodian, broker dealer, or other fintech provider, you'll have a list of all your accounts down here. It's optional to you if you want to group them. I did group them. So Stephanie Smith had 2 accounts, so I grouped them under Stephanie Smith. And then travel, I grouped under travel. So again, completely optional. If I want to make any adjustments to the portfolio or to an account, I could just select that account. I would select edit. And then I can either start adding securities in a dollar amount, or I could go in and change the weights. If I have any alternatives, I could add alternatives here as well. And then it's up to me if I want to add a proxy or not. So if I did want a proxy, I could proxy to REIT and then add an asset class to give it a score. Otherwise, I would just leave it open. Completely up to you. And you'll see that anytime it is proxied, it'll show that it was proxied to this REITX security. The easiest way to do this is to compare. If I want to make some adjustments and I want to show a portfolio that's closer to an 81, I'll just hit this drop down, and I could come in here and select any portfolio or model that I've added. So if I wanted to select maybe this ETF model, I could show the holdings as well as the 12-month potential gain loss. Some other tools show only 6 months. We feel that's way too short. You have to show at least 12 months to show a decent outcome for a potential gain loss within a portfolio. And then clients are more visual, so I could show some analytics and go into the historical simulation. This shows a 5-year track record. I could add or customize the date. And then if I wanted to show a comparison, I could come in here and compare it to that model again, or multiple models. So if I want to show this ETF model, and then also compare it to maybe a benchmark, S&P, I could do that, and then scroll over here and see the differences between the models and benchmark. I could also, again, change the time frame here, as well as do some stress testing. So global financial crisis, show that, and then export any of this information to a report. So from here, again, completely customized with your information, your client's information. I have the option of selecting a client summary, a portfolio summary, or investment policy statement. An IPS is most widely used here. Over here on the left-hand side, I could select what I want to show and what I don't want to show to the client. So if I say I don't want to show the scatter plot or Monte Carlo simulation, 5 years is fine. I could show all accounts, or maybe I just want to show the retirement account and do a comparison. Maybe do some recommendations and get show that higher outcome with this ETF model, this growth ETF model. And I could show other options as well. Let's add one more in here. Maybe we'll do this BlackRock emerging market model. Might be too aggressive. But from here, we could then preview the IPS. Again, this welcome page will be open and available to customize next week. The risk profile, the question and answer. Option 1, current portfolio recommended. Option 2, current portfolio recommended model. I'm going to paint the picture here. The growth ETF model looks nice and aggressive. Duties and responsibilities, again, this is your own text, as well as the signature page below. And then disclosures, again, your own text. And once you're satisfied here, you would just generate that PDF for your meeting. A few other features that we've added to Totum. We feel that the risk tool isn't the end-all be-all, so I may complete this and then go into a financial plan and realize that Stephanie Smith needs to take on a lot less risk or a lot more risk. So I can move this risk preference and say, based on the information on the financial plan, Stephanie needs to be a 22. So it'll show that the risk preference moved from a 38 to a 22. Please explain why. Type in your information here, why you're moving that from a 38 to a 32 based on financial plan and more reasons, and then you save it. And that'll save at that 22, and then over here for your records as well as compliance reasons, it'll show that you moved it from whatever that score was. This is from before, from a 64 to a 40, and then your comments over here on the right. So another feature that we've added to Totum. Then the risk trends, this is completely, just looking at the scores over a certain period of time. This is a little crazy compared to what it usually looks like. It's usually just one straight line, and this is a better way to look at it, with the capacity should be about the same. And then preference, the only time these should change is when the questionnaire is taken again and completed, but more in line with the changes is the portfolio. So you can see portfolio scores change over time. A number of reasons you could use this. One reason an advisor gave us was the markets dropped 500 points, client calls in, they're concerned about their portfolio. You could go back in time here and say the last time the markets dropped 500 points, your portfolio didn't move much and we're still in good shape. And then back on the dashboard, we break down your book of business by asset class, dollar amount, and percent. And then we've added this analytics tab. It's a scatter plot of all your clients by risk capacity, risk preference, portfolio score, and age. And every dot here is a client. So Law French's risk capacity is a 52. Whole idea here is to make sure that there's no outliers. So if you have a client that's over here that's at 100, you may want to find out why John's invested all in Bitcoin. Or if you have a few clients that are 1, you may want to find out why Richard Phillips is all in cash, right? Or you have a client, Law Schomburg, that has a preference of 3, which is really low. Another idea that an advisor gave us is if they have all their clients that are grouped up here in risk capacity between an 84 and a 45, and then you have 4 clients that are scoring a lot lower, you may want to find out why these clients are scoring a lot lower than the rest of your book of business. So that is Totum Risk at a high level overview. If you'd like some more information or you want to go through a demo, please feel free to reach out to us. We appreciate your time and business, and we look forward to working with you in the future. Thank you.